Second annual Africa Gas and LNG Summit is currently underway in Johannesburg. Now this year it focuses on mastering the new dynamics of the market in Africa, as well as looking at trends and trade movements in relation to the global oil and gas market. Soji Awogbade, a managing partner at Aelex in Nigeria, he spoke to Eleni Giokos earlier on. She asked him what the industry is currently looking like in West Africa.
At this point in time, I need to make it clear that the volumes of gas that we're talking about being burnt off, i.e. flared, has come down from the advertised numbers to a much lower figure. That's because there's a whole new framework for gas emerging in Nigeria that is doing quite a bit to the fuel mix that we have in the country. Now that the West African gas pipeline is in full bloom and is flowing gas, a good deal of the resources are going to the West African states near us. And that again is making the picture slightly less horrendous than it was before. In terms of gas as one of the fuels for firing West Africa, I think we're only bowing to the global trend in energy consumption, which is looking for cleaner fuels and fuels that can travel with as much safety as other fuels can travel and can be delivered at a lower price than the current fuel mix that the world is using.
Well, fascinating. You're talking about the West African gas pipeline, and we know that Nigeria exports around 22 million tons of gas at this point in time to the likes of Spain, Belgium, Portugal, the US, and even Mexico. And we know that there's a lot of room left for growth when it comes to electrification and energy consumption in West Africa and in Nigeria as a whole. Tell us about the play between the needs of the current domestic market in West Africa relative to the exports that we see, and do you think that there is a fine balance that needs to be struck?
Well, there's clearly a mismatch on the sale side and the buy side. The sale side of LNG, as you probably know, is geared towards long advance contracts for purchase. Now, if you're looking at the payment structures that will attend that kind of transaction, you will not be looking immediately in the countries of West Africa. The ability to take and pay for that kind of offtake is severely curtailed by the resources at their disposal. That's one. Most LNG plants are built on these long-term demand scenarios, and insofar as the market that is able to offer that demand is in Europe and in the US, gas will flow first to them as LNG. What I think we might see, and we're beginning to see, is some West African countries might have to consider LNG as a fuel even for their own needs. It may start with Nigeria itself, whether or not that is the pressure that Nigeria faces, as opposed to countries like Ghana, who might have an immediate demand which West African gas pipeline may not be able to satisfy.
We're talking about the fuel mix. You alluded to it a little earlier with the likes of the overall West African region at this point in time. And, you know, it's quite dire to think that Nigeria is still using, Nigerians are still using the likes of fuel like diesel and gas and actually petrol, so that they do have electricity in their homes. When are we going to start seeing things changing? And we know that Nigeria has actually come out with the gas master plan, so there is policy underway, and hopefully it'll be implemented and be felt on the ground too.
Well, that is ongoing as we speak. Perhaps one of the most rapidly moving government initiatives in recent times in Nigeria has been the development of a gas framework within which there will be more optimal use of the resource for the benefit of the country than was seen before now. Most operating companies in the oil and gas sector now, especially in the gas sector, now do have quotas for domestic demand which they must fill. And to that extent, that guarantees that the first choice goes to the local demand and their obligations to fill that demand before they can go to export.
Nigeria's energy requirements, oil around 64%, that's the demand that we see there, natural gas 27%, hydroelectricity 8%. Tell us about what you expect in the future over the next 3 to 4 years as we see the infrastructure rolling out, happening at a much rapid pace rather, and as we mentioned, the West African gas pipeline, which is changing things significantly within the region too.
Well, the dynamics of production of energy and hence the consumption of it will revolve around the cost of the fuel that's used. Hydro is by far and large a cheaper option with for energy use than would be, for instance, thermal, and gas would probably rank next to it as the available sources of fuel for firing the energy needs of West Africa. So what I think we will see increasingly would be the development, if there's deemed to be an appetite for it, more hydro plants, and of course more and more emphasis on gas than on diesel and other fuels.
So you expect the 64% that I was alluding to earlier through the oil demand that comes through, you expect that to drop quite significantly?
It will shift. I think it will shift.
Okay, well, also quite fascinating to note, I mean, I mentioned the Nigerian gas master plan that's been implemented, well, that the policy has come through, and the framework basically includes a gas pricing policy and the domestic gas supply obligation as well. So are we also expecting a lot of appetite coming through from the private sector within the overall region, not only in the Nigerian region, where they are going to be teaming up with government bodies and other multinational companies to make good on the framework that has been put on the table?
Well, there'll be mandatory aspects of the framework. So anyone who wanted to play on that situation in that space will have to comply with their obligations under the law, and that's why the framework is articulating a set of demands which the country expects from people who are playing that space. Now, the additional part of it is the financial incentive for those who are producing these resources to look at, in fact, the advantages of optimizing the upside on their activities. There is considerable upside with now playing gas, and I'm sure that more investments will go there so that we will see a more competitive mix of fuels as we go forward. Okay.